Hi all, this is Massimo from Trading for Purpose, and today I'd like to give a look at a special situation which is developing in soybean oil future. Uh, it is not very simple to analyze. So I don't know. In my opinion, it might also have a sort of didactic value. First time I would like to notice is that differently from others futures in the soybean complex, namely soybeans and soybean meal, soybean oil rallied during the last months. And as we can see, it formed an asymmetric triangle lately. Okay, academically, this would be interpreted as a potentially bullish pattern, but I have some doubt about it. And why? Okay, first thing is that soybean oil reached a resistance level. It reached it yesterday, and yesterday it formed a sort of a shooting star, and in volume spread analysis we could call it an upthrust, a pseudo upthrust, because the volume is high. As we know, shooting star and upthrust are possible reversal figures. But to have a better look, in my opinion, we should look at this market by another point of view. And here the point of view is a market profile. Okay, this is yesterday's bar, as we see. And we noticed that yesterday's bar market profile had a typical B shape. B shape is usually considered as a sign of, in this case, of long liquidation. So what we know right now is that having reached the resistance, this market right now is okay. Some traders liquidated their long positions, whilst we don't have clues that new sellers have come into the market. So, but if we look at this rally, we can see that recently the value areas, as you know, market profile uses to look at value areas much more than at precise price levels. We don't look at price here, we look at value areas. And during the last days, the value areas began to overlap each other. We can see it is 3 days it's going on this way. Price is rising, slowly rising, but the value areas are not climbing safely. So, but we don't have clues that new shorts are coming into the market. Okay, so in this case, let's have a look at the internals. Maybe the internals might give us a better clue. My favorite internal, especially when we have to do with commodities, it's got report, and this is soybean oil got report, and we have a look at the disaggregated one. If we look at the disaggregated one, we notice that the producers are largely short. They think the actual price is not fair, is too high. The funds have rallied, but they are beginning, the managed money, you can see the blue line, they rallied, but right now they are unwinding positions. And what are the swap dealers doing? What are the pension funds? What positions are swap dealers assuming in the market on behalf of the pension funds and similar? Oh, they are more or less neutral and maybe a little bit bearish, but we we cannot we don't see they are buying this market. So in my opinion, COT is currently bearish, strongly bearish. What about seasonality? Well, seasonality, telling the truth, 5 year seasonality is showing us that bean oil should rally until the end of April. If I look at the seasonality here on Thinkorswim, it's a little bit different. Just a little bit. Okay, we have a rally, but just until the beginning of April. But okay, seasonality is not largely bearish right now. I would say it is bullish at least until the end of April. So we have another chance. We'll have a look at the put call ratio, the current put call ratio. So as I said before, this is not an easy analysis, but let's check the soybean oil put call ratio. Here we are. It is 1.1. It is slightly slightly bearish. So personally, I would not get long this market right now. And personally, telling the truth, I expect this market to begin a strong retracement during these days. But as I said, the situation is not as adamant as it could be. So, future will tell. Thanks for the attention. Ciao, ciao.